Hello, traders. We're 2 hours into trading on Monday, July 26th. Let's take a look at Friday's pick. Let's take a look at the market. Let's find a new stock for today. That's how we do this. Friday, 1 hour into the open. I had mentioned to members we are not going to do anything today until we get a bullish 10p cross. Well, we got that an hour in. Facebook was the stock that I highlighted. Look at that stock run. It went from about $365 all the way up to $375, a $10 move in a very short amount of time. Google was the other stock that was on that list. Look at what Google did. That's where the alert came out, or the 10p bullish cross happened. The stock was on pop bull. Unbelievable run higher. Google, it's able to hold its gains today, so that's good. Let's take a look at the market very quickly and see what we've got in store today. The same type of setup today. I had mentioned to day traders who might be struggling, do not buy the open. We had 10p coming into a bullish cross right on the open. I said, we're not going to take that. We're not going to take that. We're going to wait for the next bullish cross. And you can see how it continued to drift lower until finally we got a bullish cross right about here. And I said, okay, the market has been able to show us that it's holding support. Support right there, the low of the day right there. Test 1, 2, 3, 4, 5 times. We get this big red candle and we retrace more than half of it. Okay, that's good. Now we're trading above that halfway point. This is where I bought S&P futures and I just rode them higher. I took gains right in here. So I made about 3.5 points on the trade. It's nothing to write home about, but it's a winner, and it's a decent winner on a lackluster day. Why did we wait so long to do a trade? We need to find out what the heck the market is doing. And here you can see, even last Friday, the early trading was very choppy. Is this going to be a gap reversal where we get long red candles that start to fill in the gap off of a new all-time high? That's been a very popular pattern. So you need to wait to see that that is not going to happen. So we check the low, we start bouncing. We've got a bullish engulfing candle right here. We've got a bullish 10p cross right about here. Now we get through the high of the day. The gains have been able to hold for an hour. That tells me we're not going to see a gap reversal. Now it's time to buy. Look at that market rally to a new all-time high. Here, we don't have that information. Here, we don't have it. Here, we don't have it. We have to wait. We've got to be patient. There are some days when you see long green candles stacked one on top of the other right out of the opening gate. Sometimes we see gap reversals where you've got a big gap up and consecutive long red candles stacked one on top of the other. Those are two instances where I will take action right away. But in this mixed candle environment on a gap higher to a new all-time high, heck no. You got to wait. You have to be patient. Typically, when traders tell me that they're struggling, they don't know when to get in, they don't know when to get out, I can trace almost every problem back to market conditions or to poor stock selection. Could be a combination of both as well. Today, what did the market tell you? Well, we had this little dip on the open, and then we had a nice long green candle and red candle in here. Nothing. Tiny little bodied candles off of a new all-time high. There's no follow through, and typically you're not going to see monster rallies back to back. The market is going to need to pause. What else do we have going on? We had overseas weakness. These are all pieces of the puzzle. It's the context that I've been explaining to you over the course of the last week. That context is critically important. So we get a breakout to a new high of the day and a new all-time high. Are we going to see follow through? I didn't know, and I didn't suspect that we would see it because we had a mix of green and red candles and very passive, very quiet trading so far today. So what did I do? I took profits here, and now I'm sitting on the sidelines and I'm waiting to see how things unfold. In the meantime, we have 10p running higher, so we're likely to see a bearish cross. I believe that this run up right in here could attract bullish speculators. And I believe that there's a chance that they could get flushed out when we retrace back into the middle of the range and we go sideways the rest of the day, trying to consolidate some of the big gains that we had from Friday. Now, this week, all focus is on earnings. And let's take a look at the daily chart of the market. Big time focus on earnings. We've got Tesla after the close today. Big earnings expected. Tomorrow, we have Apple. We've got Facebook on Thursday. Let me try and think about what we've got tomorrow. I wrote it in my pre-open market comments, and I believe that we've got Apple and Microsoft tomorrow and Google tomorrow. Yes, we do. Big numbers expected. Then on Thursday, we've got Amazon and Facebook. So all the big five tech companies are going to be announcing this week. And those five tech companies account for more than 20% of the S&P 500. So very, very important earnings. Once we get through this push, these tech mega cap companies, I believe some of the air is going to get let out of the balloon, and I think that you're going to see the market rally stall out a bit. We've run really, really hard, and you can see that here. We're up along the upper end of that upper trend line, and that typically has sparked profit taking like that and like that. And back here it was riding the upper end of that trend line, so we saw a couple of waves of profit taking in there as well. And if you go back and take a look at when Apple has announced earnings and take a look at the market and what it's done afterwards, I think that you'll see that typically once those tech companies have announced earnings, things really kind of slow down because all the optimism is built into those earnings reports. So let's go back and take a quick look at Apple, and we'll be able to see on the daily chart when it announced. It tends to be late in the cycle, not always. And here we can see Apple on Jan 27th, and we can see Apple on April 27th. So Jan 27 and April 27. Let's go back and take a look at the market here. Jan 27 and April 27. So we'll go back to January. And there's January 27th right there. And then what happened? See ya. A little bit of a drop, a little bit of a letdown. The air comes out of the balloon. Not for long. This might be a nice little buying opportunity in here. So let's go to the April 27th date, which is right in here. So you can see Apple announces in here, not the drop right away, but eventually we get this dip right in here. So that's what I'm expecting right now. I think that this is a time to be fairly cautious, and I believe that you're going to see some profit taking along this upper trend line here, and that dip is likely to be a nice buying opportunity. So that's how we're going to be looking at the market. Let's see if we can find some trades for today. Let's go back to that 5-minute chart and see what the S&P is doing. Right here, we've been able to hold the gains, and that's a good sign. We may edge higher in here. If we were going to see a reversal right back in, you would see long red candle, right after one of these long green candles. So you get that breakout, maybe a bar, and then a red candle, and that would flush out those bullish speculators. But for right now, it's holding. We've got 1 OP spiking. So as a trader, here's how I'm going to be trading the S&P futures off of this information. I'm going to be waiting for it to crest, and I'm going to be waiting for it to roll over. If the 1OP indicator starts to roll over for about 20 minutes or so, and the market is still able to hold these gains, that will tell me that the bid is growing and that this is likely to be a bullish divergence, and that I should get long and expect continuation on this breakout. Right now, it's looking pretty good. I would say that yes, we could continue to float higher. So that's kind of the backdrop that I'm seeing. I'm not seeing a lot of great stocks that I want to buy today. So I'm going to go in. We'll take a look at a couple of searches like heavy buying. Coin has been strong today, but I'm going to continue to go down and look for something that I like better. ZM bounce off the 50-day moving average. You've got your downward sloping trend line here. It's breaking out to the upside. It looks okay. Roku put in a big day. Look at that long green candle. Today it's trying to break through this horizontal resistance. It's got to get through it to prove it to me, but I do like the fact that it's able to build on this long green candle right here. That was a beautiful bullish flag formation there. So I do still like Roku. And you can see the market's trying to inch its way higher here. The crypto stocks have been very hot today. Now, this is not a bullish long-term chart, so I don't really like to call this a bullish flag formation because that's not much of a flagpole right there. This is more of a bottoming process. Downward sloping trend line, breach to the upside. Even that longer term trend line, you can see we're above it. We're above the 50-day moving average, so looks okay for a day trade, but I would not want to hold this overnight until it can prove to me that it wants to go higher. You can see MARA is actually holding up pretty well today. So, excuse me, that was Riot, but MARA, kind of the same deal, same longer term chart. And you can see that pattern right in there. And again, above the 50-day moving average. So both look pretty good. They've got decent strength today. So nothing to write home about, nothing I'm getting too excited about. Market's at an all-time high. We need to be careful here. As I look through the list, I see CVX, I see COP. So I know that energy is catching a little bit of a bid here. You can see how the stock is above the 100-day moving average, kind of moving through this little downward sloping trend line, longer downward sloping trend line, not quite through it, but decent, traction at this lower level. I still haven't found a stock that I like, so I'm going to continue to move down here, take a look, find something that I like here. Very, very quiet day. STX has got to be above that 100-day moving average. It's been battling it all day. I don't know that it's going to be able to get through it. And we'll continue to take a look. Tesla announces earnings after the close today. It looks really good, but here's the problem with trading stocks that announce after the close. They can be very, very volatile, so everything can look perfect, beautiful. There you've got your nice rally here, long green candle stacked one on top of the other, downward sloping trend line, bullish flag formation right here. Stock surges higher to a new high of the day. These are all really good day trading signs. If I were going to be day trading, I would say, yeah, Tesla looks pretty darn good. If I go to the daily chart, there's a lot to be desired. It's trying to get through this horizontal resistance here. It's simply bouncing off the 100-day moving average. It's been above and below that 100-day moving average with frequency and, of course, the last week. So I don't really like the daily chart that much. Still struggling to find anything that I might really want to day trade here. We'll take a look at some of the short squeezes. BTU, that looks pretty decent. It's moving higher. And CHWY is trying to get through this horizontal resistance, but that's a bearish hammer right there. So looked good early and then backed right off. Maybe today I just don't give you a pick. I'm not seeing anything that I really like. And that tells you that you should not be trading. Take a look at CVX. Trying to bounce. Let's see if it's got some relative strength. I don't like dips like this. I want those nice 45-degree angles without this kind of dip because this tells me that there are sellers. They can smack that stock back down if it gets ahead of itself. Take one more look at ZM. I think it's been pretty strong today. I do like this. It's been gradually working its way higher on this market breakout. It made a higher low. Even when the market was pulling back earlier, it was able to hold most of the gains for the day. So I do like ZM. I think that's one that you can watch today. Don't trade a lot. Keep your powder dry. You're going to have massive earnings announcements this week. You've got a very good chance that once the mega cap tech companies announce earnings this week, that there is a bit of a market letdown and some profit taking next week. We're at the upper end of that trading range, so you need to be very careful in here. That's all I've got for you today. I hope tomorrow I'm able to find something that's got a little bit more pop to it. Know that every stock out there is pretty much overextended, overbought right now. So the upside's fairly limited until we get a market pullback. Then we can come back in and reload. Thanks so much for watching. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.